everyone, and welcome to the week ahead from ICM Capital. So we're going to first start by talking about the key movers that affected the market last week, and then highlight some of the key economic events for this week, and then move to the MetaTrader 4 platform and try to find some market setups. So first, let's start with the key market movers. So among the headlines, it's always there for the past couple of days, Trump's health status. So as we all know, that Trump got tested positive, him and the First Lady in the United States. So both they were tested positive for COVID late last week, and this affected the market for initially. So we saw a drop in indices. However, we saw after that a little bit of a recovery following doctors' announcement that he's in a good situation. And this was followed by a couple of appearances that he made. He filmed some videos on his Twitter, and then yesterday he was with a motorcade, and he was waving at his followers or supporters. So this also eased investors' woes about his possible health status. Also, there was another headline stating that he might be discharged from hospital today. So it's a bit there's a bit of uncertainty. So it's still early to know more about his health status or how his situation will evolve. But definitely this will impact the market. It impacted the market last week, and definitely it will weigh on the market for the coming week, especially if we witness some either positive or negative news. They will both have an impact on the market, especially on the stock market. So this is for Trump. You have to keep in mind that it is one of the key movers. Despite having, like last week, the jobs report, it didn't have a major impact on the market, since the market was also waiting any hints from regarding Trump's situation. So this is the first mover. The second mover, the COVID-19 implication on the economic recovery around the world. This still continues to be one of the main issues, especially that the cases are still rising. Governments are trying their best not to go for a full lockdown that might affect or might kill the economic activity. So they're trying to minimize the exposure, but yet keep the economy running. So this definitely has some cost to pay. We heard a while ago also ECB's Weidman, or also he's the Bundesbank head. He was stating that they're currently seeing a more flatter curve in the economic recovery versus expectations of a V recovery back in June or July and August. They were expecting a V-shaped recovery, but now they're seeing that the curve is a bit flatter on the side. So this will be monitored closely by all the economic data to come out. We saw from the Eurozone, from the United Kingdom, that the economic indicators were strong in June and July. However, we started seeing a little bit of a drop in August and in September, and definitely this will weigh on the prospects of a healthy and rapid economic recovery. Moving to the third topic, the Brexit. Still no deal between the United Kingdom and the European Union regarding the trade. So this is weighing on the market. We saw the British pound last week having the seesaw sessions, up and down for a couple of times a day. This is due to uncertainty regarding this topic and due to the impact of different headlines on the market. But now a spokesman from Johnson's side, he stated that they are looking forward to find a deal before October 15. So time is running, time is ticking for Boris Johnson, and this as long as we approach the final deadline, this will impact the British pound sharply. The third one was the soft Eurozone inflation data. On Friday, we had the consumer price index. So inflation, the consumer price index from the Euro region. Lately, we heard from certain officials in the Euro region that they will have to monitor the strength of the euro and its impact on inflation, since definitely we know if inflation remains negative, the central bank will have to move forward to have like more intervention in the market to ensure price stability and demand is in the market. So this is from the Eurozone inflation data. It had an impact on the euro, but still we're trading sideways. We're going to discuss this in the last section. Moving to the final one, the US jobs report was released on Friday. The unemployment rate fell to 7.9 versus expectations of 8.2. It's really well. The non-farm payroll showed that the US economy created 661,000 jobs back in September, lower than what we expected of 850,000, almost 200,000 lower. So this will have this will start to raise if we continue to see like lower job creation. This will also flag some alerts on the status of the labor market recovery. Also, the average hourly earnings were slightly softer than expected, a rise by 0.1% versus 0.2% expected. So these were the key market movers during the past week. In addition, definitely to the debate between the first presidential debate between Trump and Biden, but still it's too early. It was too early also to guess which side the market is favoring or what the market will how the market will be affected, since it was no man's land. No one was able to take advantage on the other candidates. So this is for the key movers. Now let's move to highlight the top economic events for the week. We have a couple of economic events taking place, and especially we have a couple of central banks officials will be speaking this week. So let's start with Tuesday. So we start tomorrow with the Reserve Bank of Australia monetary policy meeting. The bank is widely expected to keep policy setting unchanged. However, you have to watch out for any changes in the statement that could hint for a change in tone towards, for example, more easing or further stimulus on the long run. So this is we have to be careful for any changes in the statement or any hints for more dovishness in the statement. Also, the Australian annual budget will be released. There are some leaks that it could carry some income tax cuts, which could help also the economy to economic activity to strengthen again. Moving to the United Kingdom, construction PMI expectations of 54.1 reading versus 54.6 in August, and then the ECB President Christine Lagarde will be speaking twice tomorrow. So first intervention will be at the Wall Street Junior Online CEO Summit, and then the second time she will be also participating in a virtual panel discussion at an event celebrating the 10th anniversary of the European Stability Mechanism. So this is also her speech regarding the economic outlook in the Euro region, or any possibilities for any change in policy would have an impact on the market. In between, we have the US trade balance, expectations of a deficit by 66.2. The deficit is widening, especially we're seeing was back then like almost 50 billion. Now we're seeing almost 66 billion change. So this will trigger Trump's concerns, but currently Trump is solving his health situation first. So and then we continue from the United States. Jobs openings, expectations of a rise to 6.685 million versus 6.618 million in July. And then also Powell will have Federal Reserve Chairman Jerome Powell will be speaking. He'll be speaking about the US economic outlook at the National Association of Business Economic Panel economic annual meeting. So also any headlines, any announcements, any statements regarding the path of interest rates, for example, or any changes or any dovishness for the monetary policy on the long run, this will have an impact on the US dollar. Also, we end the day with the American Petroleum Institute weekly crude oil stock, like usual. On Wednesday, it's a bit shy. Also, Christine Lagarde will be speaking, but this time in Paris. So also any hints on the recovery will impact the market. And then we have the weekly oil report by US Energy Information Administration, expectations of a buildup by 1.569 million versus decline of 1.98 million last week. And then also one of the key releases this week, the Federal Open Market Committee meeting minutes. So also any hints on the future path of monetary policy would have an impact on the market. To Thursday, we start with the German trade balance, the Eurozone, which will affect the Euro. Nothing much of a change is expected. So 18.2 versus 18 billion previously in July. The governor of the Bank of England will also be speaking. He will be participating in an annual panel discussion. So any talks about possibility of using negative interest rates will weigh on the British pound. Also, the Swiss National Bank Chairman Thomas Jordan will be speaking on that day. Also, one of the releases, the minutes of the European Central Bank of the last monetary policy meeting. So this could have an impact also on the euro, especially that last meeting was a bit tense, and there were some talks of possible impact of the strength of the euro on inflation levels. And then we have the initial jobless claims from the United States, which only rose by 137,000 last week. which is the lowest since the pandemic. And now we're expecting only 820,000 reading. So Friday, we start early from the United Kingdom. GDP, the gross domestic product, for month-on-month change, expectations of that the economy grew by 4.6%. Also in manufacturing production for August, expectations of an expansion by 3.0%, industrial production also 2.5%. So positive readings, expectable readings. But if we can compare it to the previous ones, so versus 6.3, we're getting like 3.0. So this will show that the economic recovery is slowing down as we move away to August and September. Also from Canada, the jobs figures, employment change expectations of a rise or a buildup of 153,000 jobs, and unemployment rate to fall to 9.8%. And we end the week with the US Baker Hughes oil recount, which rose to 189 last week, showing that the activity of oil production in the US is back slightly to emerge again, or to light again. So these are the top economic events for the week. Definitely, you have to keep in mind any headlines regarding Brexit will have an impact on pound pairs and also on the euro dollar or other euro and other counterparts. Also, any headlines regarding Trump's health status will have an impact on investors' risk appetite. So these are the key economic events for the week. Now we're going to go to the MetaTrader 4 platform and just discuss some of the key charts. So let's start with the euro dollar. Just start with the daily chart. On the bigger picture, first we were trading inside this certain type of formation. We were trading inside almost a 300 pip range. There was a sideways trading despite having higher highs here at this area, and then we went from higher highs to lower highs and lower lows, and then the market here now is currently breaking to the upside following certain changes. So if we just have to clear to go a little bit in depth on the chart, we can see that this level here, or this area between 1750 and 118, was key level earlier. So this range here was a key level. So now we're almost at the defaulted point to future levels. So how the price will react at this area is a must to watch out in order to try to forecast what will come next. So this is the first thing that we have to highlight. And if we just go for the H4 platform, the H4 time frame, we can also draw this channel that we've been trading in for the past couple of weeks. So the market is trading inside this channel. Now we have to watch out, since as I just said, this area is a key area. It was providing some key support previously when the market was trading inside the range of 200 pips almost. But now after the break, we retested this line here, or line of resistance, and then the market dropped again, and now we're trading almost near it, and it's coinciding with also the downtrend, the upper side of the channel. So this is something that you have to monitor in order to check where we could be. Okay, so this is for the euro dollar. If we just add some of the technical indicators here. So first, we can see also how the moving averages supported the price. So on the 100-day exponential moving average, the price bounced since then, and now we're currently trading near the 20-day simple moving average, which is the middle band of the Bollinger Band. And also, if we go for the H4, we can see that now we're trading above the 100 and 200-hour exponential moving average, H4 exponential moving average, which was playing as a key resistance during the past couple of days, and now we're finally being able to trade above it. So this will have a lot to tell you. So watch out for this the break of this trend line. And since we're trading above the 100 and 200-hour exponential moving average, we need some filtration here to confirm that we could be targeting a higher level near 1915 and then 120. And on the downside, if we were just able to trade back below the minor support near 1690, this could get the bears more in control, and then we could see another drop towards 1612 level. So we're almost trading inside the middle, almost in the middle range, slightly lower we're trading near the trend line, near exponential moving averages. Also, we have key supports and key resistance levels highlighted. So watch out how the price will play. These are the key resistances and key supports if you are trading the euro dollar. So now let's move to the British pound. Okay, so if we just moving to the British pound, if we just start also with the daily chart, we can see how the market was able to test a lower low, but currently we're trading almost slightly below the 130 level. We weren't able to break above it, but there's still a little bit of a push higher here. But last week we had a seesaw trading, so if you can see on the H4 charts, it's very clear that we were trading up and down due to the headlines regarding Brexit. So on positive news, we were trading higher. On negative news, we were trading down. So despite this, we were able to set some higher lows, but still we need to break above here in order to post a higher high. So 130 remains one of the key levels for investors. 130 is a key level, and after that we could be targeting 132.60, but ahead we have also a minor support, minor resistance near 130, 185. So these are the key levels on the upside if you're trading the British pound against the United States dollar. And on the downside, I'm going to go to the hourly time frame, so we can see here that we're trading inside this channel. So the borders of the channel should be monitored closely. We're trading here. We're setting higher highs. The top of the channel is also coinciding with the previous resistance. So watch out how this will play. And on the downside, any break below the bottom of the channel would trigger another drop. Would trigger a drop towards 28.05 almost, and then to retest the previous low of almost 26.75. So these are the key levels if you're trading the British pound against the United States dollar. 130 remains a key level. So also it's coinciding with the channel that has been formed by combining the previous tops and bottoms for the past couple of trading days. If we just add the technical indicators here, just to confirm some price action. Okay, so you can see here how the market is trading. We found support near the 200-day exponential moving average. The RSI here, we had divergence, we had lower low, and the RSI was higher. We had a higher low in RSI, so this is a sign for divergence, but still this level is a key level, which is 130, and it's also coinciding with the upper band of the Bollinger Band if you're using period 20. Moving to the H4, you can see how the price was trading near the upper section of the Bollinger Band, finding support near the 20 H4 simple moving average and trading near the upper band. And now the 130 remains as key to clear the way for bulls. If we also move to the hourly chart, we can see how the 100 and 200 hour exponential moving average acted as key support for traders. So if we are going to go for another reversal, maybe to the downside, so watch out how the price will perform with these moving averages. So maybe we can go for a lower low if we are going in the other direction. But currently we're closing up to the resistance level or psychological level of 130. So this is what you need to know about the British pound. Moving to the dollar against the Japanese yen, nothing much is happening. The volatility is a bit low on the pair, despite having some move lower on Friday due to the NFP, but still on the bigger picture, we're still trading inside a key zone. So if we just draw the trend line here, we can see we're still facing lower highs, and almost this region here was almost the same low. So we're just having the same lows here, and we're consolidating inside that's almost the 200 pip range. On the closer picture, or on the clearer picture, you can see this move that took place on Friday, and now we recovered almost the full move. So we just need to highlight, you have to set the previous resistance zone, which was almost near 105.80, and there's an interim support near 105.23 and another one at the low of 104.95. So these are the key levels, in addition to the 104 level on the bigger picture. And on the upside, you better watch out for any retest for this trend line near 106.20, and any break above this trend line could trigger another move higher towards the 106.50 level, 107. So this is what you need to know about the dollar against the Japanese yen. Even if we add these technical indicators, you can see that they're hinting for low volume for low volatility. Even the bands of the Bollinger Band are closing in, and we're trading on the 20-day simple moving average. On the H4, you can see how the bands were tighter, closer due to low volatility. On the hourly chart, we have the spike here on the news, and then we recovered the full spike higher. So this is what you need to know about the dollar against the Japanese yen. Moving to the dollar Swissy, it's almost exactly the opposite to the euro dollar. So if we just go to the daily chart, also we were trading sideways here, and then we're able to break to the upside. Now we're moving down again. We're in a key region between 91.50 and 92. So here you can draw a square to set the importance of this point. So it's almost here. So this region here is key for traders. If we trade below it, we could go for further lows or retest for further lows. And if it was able to hold, maybe we can go for a retest to the previous top. So these are the two scenarios that are available in the market. So which one do you favor? You have to check some key catalysts or drivers in the market. So we just go for the H4 chart. You should go for drawing the trend line, combining the previous lows. So watch out for how the price will react near the 91.30 area. So this could be one of the key areas, maybe for reversal or for continuation. If we just add the technical indicators, you can see how the 100-day exponential moving average acted as key resistance, and the 20-day simple moving average acted as support for 2 days, and now we're trading slightly below it. Also, if you can draw a trend line on the RSI here, and you can see we're able to break below this trend line that was combining the recent move higher, the consolidation, and the move higher in the dollar Swissy. Go to the H4 chart. Also, we can see here that the Bollinger Bands closed into each other following this slight consolidation here. Now we're trading below the 100 and 200 H4 exponential moving average. So watch out how this will continue tonight, and wait for some filters in order to join the trade. So this is mainly all about the dollar Swissy. Moving to the Australian dollar against the United States dollar. So on the bigger picture, also similar information. The Australian was stronger than the dollar for a while, and then the dollar dominated for this move down, and then we were able to have a slight correction to the upside. So definitely, if you want to point some key areas to cross above in order to clear more the way for the bulls, we have to trade above this trend line, and also we have to set the previous support zone, which now is turning to resistance near 72 level. So the 72 level is a key area. If we're able to trade above it, definitely we can retest the downtrend line, and here we can decide on the trade whether we are going to face another move lower, or there's enough momentum for the market to break above and then go for the previous resistance zone near almost 73.40. So these are the levels, and on the bottom we have the 70 level, and ahead of the 70 support we have the 70.70. So these are the key levels if you're trading the Australian dollar against the United States dollar. Watch out from today's Reserve Bank monetary policy meeting and the annual budget release. We're just going to add the indicators again. So also on the daily chart, you can see the 100-day exponential moving average acted as support for the Australian dollar, and the 20-day simple moving average is acting as a key resistance. On the H4, we're trading sideways, and the Bollinger Bands are closing in, so they're hinting for possible consolidation here that we will be breaking away from on the release of the interest rate decision or the annual budget balance. So watch out how this will evolve. Also on the hourly chart, it's much clearer that we're trading sideways inside almost a 100 pip range. So this is for the Australian dollar. Moving to the New Zealand dollar. So on the daily chart, on the bigger picture, the support zone is holding the 65 level. We were able to trade above the previous support, which turned slightly into resistance here, into the intraday resistance, and then we're trading above it. A key resistance level near 67, and the double top at 67.90. These are the key levels on the upside. But now we're trying to trade sideways following this move higher. If we just also get closer on the H4 chart, you can draw the Fibonacci retracement to check where we are. We're currently at the 50%. We're trading between the 50% and 38.2. If we're able to trade above this, we can retest definitely 61.8 or a little bit extra to the 67 level that we just highlighted. Else, we on the opposite scenario, we can be having like a double top formation here, and then the market could move lower, and then we have sideways, and then another move lower. So this will definitely have we will have to deal with what come next, or the movers that are going to come next for the dollar strength, since we have nothing on the New Zealand dollar for the week. So this is for the New Zealand dollar. We could also, on the other, this is one of the scenarios. The other scenario could be that we're here, we had the move higher, and now we're almost having a little bit of a consolidation, which could be a continuation form, and then also go for another move higher that would be equal to this, and then this would lead us to the double top formation that we already traded at before. So this is for the New Zealand dollar against the United States dollar. If we just go also for the H1, we're going to have a closer look here. We are trading also inside this channel. So this channel is also coinciding with the 38.2 retracement on the bottom. If we're just going to trade on the next hours at this level, so it's going to be closer to the support and the 38.2, and also the bottom of the channel. And on the upside, if we're able to clear above the 50% retracement and going to move higher here, it's possible to also reach this confluence here between the Fibonacci and the top of the channel and the previous resistance level. So this is what you need to know about the New Zealand dollar against the United States dollar. I'm going to just add the indicators for a little bit more of clarifications. So let's start with the daily chart. You can see how almost the 100-day simple exponential moving average held the drop, and now we're trading near the 20-day simple moving average, the middle band of the Bollinger Band. If we move to the H4, we're trading near the 100, 200 H4 exponential moving average, and the 20 H4 simple moving average, which act as support 1, 2, 3, and currently we're trading near it. So this is acting as key support. On the hourly chart, we have the channel that we drew, and also the 100 and 200 hour exponential moving average acted as key support also, and pushed the prices again higher. So watch out how the price will react here near 66 level and at 66.60. The dollar against the Canadian dollar, the US dollar against the Canadian dollar. So first, if we just go for the daily chart, on the bigger picture, we were able to retrace almost 23.6 from the whole move down. Now we settled here. We had a double top formation, and the market moved lower. Also, there was a confluence. Here we're trading near the 38.2. If we're just gonna have a clear retracement for what's happening currently. So this is on the closer picture. Also this trend line that we were currently trading above it, and now we were able to cross below it. We're looking for a lower low formation here. So we have a lower high and now lower low formation following this consolidation trading that was happening here. So we had a certain consolidation and the market moved lower. So we just have to highlight it. So we had an ascending channel almost, but this resistance held sharply and the market dropped again towards the slow, which is almost acting at the 32.60 level, which was a key resistance ahead of this breakout. So we just look at the bigger picture. The 32.60 is a key level, so how the price will react today is key to decide on the next trade. And these are the key levels that you have to watch out for. So the 132.60 and on the downside continues to almost 131.25, and on the upside 32.30 and 34.25. So also here you can see how the daily exponential, so almost similar formation on all pairs. They found support near the 100 and 200-day exponential moving average, and now the vice versa for the other way around for the USDCAD. So the pairs with commodity currencies as base currencies, they found some support near the 100 and 200 day exponential moving average, but pairs with the dollar as base currency, they found resistance near these levels, and then they were finding support near the 20-day simple moving average. You can see how this moving average played as key support previously here, 1, 2, 3, 4, and now 5, and now we are able to trading back below it. So watch out how this will evolve. If we go for the H4 chart, also you can see that we're trading slightly below the 100 and 200 H4 exponential moving average for the first time since almost the 18th of September. So watch out how this will come and play, especially that we were able to trade below below this trend line. So this is about the USDCAD. Moving to gold. For gold, we were trading inside this this sideways formation. It was also somehow a descending triangle, and then the market retraced here. So we had this break, the market retraced, and then we went lower to the 38.2 retracement of the oil move from the top to the bottom. So almost we had similar pricing here, 38.2, and now we're almost trading near the upper zone. So we moved to trade another sideways range, unless we were able to break above the 1920 zone, which could trigger another move higher towards this extended trend line, or also towards this trend line. So we have a key resistance here and then another key resistance here. I'm gonna draw them in the MT4 line, so it's gonna look better for you. We were almost trading inside this this channel here, and now we're looking forward. If the market has more catalysts to move to the upside, we have to break above the 1916 level, and then the next level coming at this trend line almost near 1925, and then higher near 1940. So these are the key levels. If you're trading gold, we have to clear. If you're looking for further gains, we have to clear above the first trend line, and then the second one ahead of moving higher towards 1973 zone. So these are the key levels on the upside if you're trading gold, and on the downside, we better keep up above 1887, 1880. This is a support zone that was solid for the past couple of swings lower. The bears failed to set their own trend, and the market reversed to the upside, but any break below 1880 level could trigger another dip towards 1850 levels. So this is on the clearer picture for gold. If we just have to add some of the indicators. Also similar formation, the 100 and 200, the 100 and 200, 100-day exponential moving average acted as support. So we're finding some resistance near the 20-day simple moving average. If we go for the H4, also the 100 and 200 H4 exponential moving average acted as resistance previously, and they blocked the move higher. So watch out how this will move now, especially that also we're seeing some impulsive move to the upside in the past couple of hours. On the hourly chart, we're trading above the 100 and 200 exponential moving average that they converged at this point here. So also the 100-hour exponential moving average acted as key support 1, 2, 3, 4, 5, and almost 6 times in the market rally to the upside. And now the Bollinger Bands are diverging again. And also, if we just draw some confirmations to the upside, you can also draw on the RSI these levels that we are almost on it. So this confirms that we need to break above 1915, 1920 in order to move higher to the upside. So this is what you need to know about gold. Moving to silver, on the bigger picture, we're still trading inside this channel that we highlighted last week. So if we move to the H4, we're still trading inside this channel, and now we're stalling here. We're having a sideways move, so we just have to highlight it. We're almost moving to having a small almost a small triangle here. So watch how the price will break above it. So usually if the triangles are known as continuation patterns, so if the price were able to trade above it or break above it, this could maybe lead to another move higher towards the support zone that could turn into resistance near 2580 level. So watch out how this will play moving to oil, the WTI. Finally, after having after trading inside a certain range for a while now, now oil is moving again. So we retested the previous low on Friday, and now we were able today to bounce a little bit higher on some positivity over Trump's health. So also on the bigger picture, we are trading almost inside this formation. We're moving again into consolidation near this formation. We would be awaiting some fresh drivers in order to decide further on the move. So just kind of highlight here. So the first confirmation for the bulls was to break back above this trend line, the down trend line that's formed here. So we need to clear back above 40 level, almost around the 40, which is the trend line. And then after that, move to 40, 160 in order to retest the previous highs of 44. And on the downside, definitely 37 is a key ahead of 34.90. So these are the key levels if you're trading oil. The interim support, watch out for the interim support, which is turning into resistance also near the 39 level. So this is what you need to know about oil. I'm just going to add the indicators for some confirmation. On the daily chart, the bands are closer now after having moved away from each other here due to the sharp move down. But now, since we're trading inside almost the same range, the bands are closer. The 100 and 200-day exponential moving average are closer, also combining with the 20-day simple moving average. Nothing much is happening, or nothing much to tell, but mainly also here we had almost similar low, but the RSI was a bit higher, so maybe this could be used as type of divergence. On the H4, the 100 and 200 H4 exponential moving average acted as gave some resistance previously, so watch out how they will play currently when the market approaches them again. On the hourly chart, we're also testing the 100 and 200 hour exponential moving average. So any break above them could add some positivity to the market movement. This is for oil. Moving to the Dow Jones. Okay, so on the daily chart here, you can see how the market rebounded, but still we're having like huge volatility throughout the day. Market is the index is moving almost 500, 600 or more points during each day. So this is due to the headlines, to the uncertainty, to all the events that are taking place that they are adding to the volatility in the market. But now you have to watch out if you're trading US indices. Any headlines regarding Trump's health will definitely have an impact on the market. So watch out how this will play. On the H4, if you just have a closer look, you can also draw the previous stops that we were trading. So 1, 2, we tested exactly this stop, and then we had a move lower, and now we're approaching the trend line again that was combining the recent tops. So watch out how this will come play. Some people could say that this is an inverted head and shoulder, but still there is no proper confirmation on the right shoulder. So watch out how this could play. Any reversal or any move back below this trend line that is combining the previous stops could lead to another move high, to another move lower. An interim support could be also near this region, near 27,250, acted as support twice. So any break below this could lead to another move to retest the lows near almost 26,500. And on the upside, we need to clear above this resistance zone or this trend line, and also to 28,100 in order to have a little bit of a move higher towards 28,400 and even higher. So this will we can draw a couple of scenarios technically on the Dow Jones, but this will also rely on the developments of Trump's health situation and whether he's able to surpass COVID-19, and maybe he could push for some maybe some achievements in this regard, maybe for the Regeneron treatment or for remdesivir again. So this is still too early to see how it will come and play. So this is for the Dow Jones. Also, if you just trade, if you add the moving average to trade, you're also getting some good signals. So here we had clear support at the 200-day exponential moving average, and the market moved higher above it. On the H4, the Bollinger Band is almost closing in, hinting that the market is consolidating inside a certain range that is ready for a breakout in a while. And then on the hourly chart, also this confirms that we're also in the sideways move, awaiting some fresh fundamental drivers for a push either higher or lower. So this is what you need to know today about these key financial instruments. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Now, if you have any questions, please write them down so I can answer them. Oh, sorry. So I'm using the 100 and 200 exponential moving averages. And also, if you, for the Bollinger Band, I'm using period 20, so it's the 20 simple moving average, the middle band. Okay, this is it for today. Thank you all for watching, and I wish you a good trading week. Thanks again.